Good morning, everyone. It's December the 2nd, 2015, as we roll into Christmas, and we've got a big news week in front of us. Tomorrow's ECB rate, and the chatter is right now minus 10 basis points, plus 10 billion a month increase in quantitative easing, and the European inflation rate is lower than forecast. It's lower than 1% for the year. And like all good Keynesians, they like 2% plus or minus per annum in inflation. And why? Because it cuts the debt in half every 50 years. ADP is the news focus. 183,000, 150,000 per month absorbs the increased population. Greater than 200,000 shows pretty good job growth. Greater than 250,000 shows excellent job growth. Non-farm productivity, which no one pays attention to, but this really is the key to long-term economic growth, plus 2.2%. Unit labor costs, and this number I think could probably come in lower at plus 0.9%. No one's going to pay any attention to either of these two from a trader's standpoint. Then we have Fed governors and Yellen speaking today, and they're scattered throughout the session. Yellen and I forget, maybe Lockhart speak before 8:30 Eastern this morning. Then Yellen comes on at noon. And then we have the Beige Book. And the Beige Book will get a hard look because they'll see how strong business is in the 12 Fed regions. And last week, I think, 8 of the Fed regions, and I'm not sure, don't hold me to the number, showed decreasing economic growth. So the news focus is going to be the ADP number, followed by the direction of the E-mini. And I think, again, the easiest trade to see is just failure to take out and hold 127 even. So our first sell is 31 to 03, then 7 to 11. On the buy side, I think we can come a little lower, because it is a B and it is pointed lower. So we're going to try for 21s to 25s, like the 17 to 21 I think is the correct buy zone. But if the E-mini sells and continues to sell, it is under a little sell pressure right now. It's going to be hard to get it much below 24, and buy 2 will be 13 to 17. The breakout came from 16. Right here, took out the overnight session, the Globex high. So I think the market would like to retest this 16 area before it can turn around and trade higher. Yesterday's rally pretty universally is attributed to Fed can't raise interest rates anytime soon. And I think central banks around the world are trapped. And their policies do not, as fast as they do something to try to support the economy, some bureaucrat increases the rules and regulations. And I mean, we're being throttled in the United States, and it's going to get worse until the current administration leaves. And these are regulations that are designed to cut productivity, to cut industrial production, to redistribute wealth. And it's hard for an economy to get the growth it needs to overcome all these structural defects, like having to borrow to spend money, can't fund pension programs that are already promised. And if you think people go quietly in the night, look at what's happening in Greece. Look at the riots in our cities. And we haven't even touched these people that are writing paychecks. We haven't taken their money away from them. They just inflamed about basically their living conditions, which suck when you get right down to it. But they've got enough cash to survive in that environment, and they're paid to protest, but not break into widespread destructive rioting, in my opinion. Okay, again, the easiest trade to see is failure to take out yesterday's high at 56.05. So the first sell is 31 to 03. Get through that, then it's going to be 11 to 15. On the buy side, multiple breakouts yesterday, so we've got pretty good support down here in the 156.06 area. That was the last rotate down in D period. We've got a single print at 14. We've got the overnight session low at 20. So 17 to 21 is buy 1. And then 5 to 9 will be buy 2. And the ADP news is at 8:15 Eastern. That's going to be the major piece of news. Gold held in there pretty well overnight. Didn't break, didn't move big time. Did get to our sell zone. And we did get light selling there. So basically we were selling 70s to 75s yesterday. A little bit inside of that for the first sell. And we got ourselves another B looking at. So it looks like we're going to trade lower. We have stops below yesterday's lows. So we're going to put the first buy at 60.62. Knowing full well that the 63.65 might hold. Then 55.57 for buy 2. 69.71, which is where we were yesterday afternoon, sell 1. 74.76, sell 2. And we're liable to see a trading range, and probably the low volume number based on the current distribution is right there in the 1061 area. Okay, if the European Central Bank does raise interest rates tomorrow, it should take the euro lower. How are they going to pay for that? Why? We're going to run the euro down and we're going to export more goodies. We're going to get growth. Everybody forgets the bureaucracy that Europe has to deal with every day, and if we think it's bad in the United States, what goes on in Brussels is what's coming to the United States. And we have our bureaucrats trying to emulate the European Union, Union bureaucrats as fast as possible. So this break or spill was at 610, so 106.10 to 20, sell 1. 106.40 to 50, sell 2. Pretty aggressive on the sell side. On the buy side, 105.75. And then 105.50 where we were yesterday. And we haven't gotten to the buy zones yet, but I do like the short side of this market better because of central bank policy. Okay, crude, today's inventory numbers. They're expecting a draw of 600,000 barrels. Market is headed lower, and you can just see a lot of people don't understand the concept of volume. And so we see this volume right here, and it's definitely a B, and the market is going lower. But this isn't the volume that controls the activity. This is the volume right there. That's the controlling volume. And as long as we stay beneath that, the market can sell. So the market does manage a rally. This volume is above that, but it's not above that. And you have to get this concept rooted in your thinking. So as long as 42.75 holds, this market can trade lower, and what we can see is yesterday's volume was lower and the overnight session volume is lower. In London Last rotate up stopped at 68. So 75 to 42, sell 1. 2 1/4, 250, sell 2. On the downside, it is a B. We are pointed lower, so stops below 41, 40, 75, 41 buy 1. And then 40, 40 1/4 buy 2. Looking for draw of 0.6 million barrels. To the E-mini. Had a very strong rally yesterday. We've been talking about 2100 would make the Fed happy. We're going to get there. This market probably is going to close on new highs for the year, going to the end of the year, and it's not going to do it on anything else other than Fed support for the market and the trading community. So you just, it's where we are. So had the breakout from basically 98, so 95, 98 is pretty damn good support, and we've got resistance at 4 to 8. 2105, 2108 is good resistance. We have the ADP number coming up first, 183K. Number could come in, if they were honest, it would come in lower than this, but they're not. For the election cycle of 2012, ADP graciously adopted the Bureau of Labor Statistics way of computing unemployment numbers, so they're lockstep. And what happened to the CEO of S&P rating services has scared the hell out of everybody that's got a rating service, and if they don't toe the line, they know they're gonna get jumped on by the New York Fed, the Treasury Secretary, and even worse than that. Worse than fines they face with the Labor Department, the way that it is. Department of Justice, they face scrutiny from those folks too. The you better say what they want you to say or else. Non-farm payroll, productivity, plus 2.2%. It's an important number, but traders don't key off of it. Unit labor costs. Out of that report, that's the one that they would key off of, plus 9/10. That one should come in lower. You got Fed, Lockhart, Williams, a bunch of people speaking today. Got the Gallup job creation index. Nobody will trade that. You got crude, minus 600,000 barrels. And then the beige book, which people will look at. And I think 8 regions last time reported declining economic activity. I think only 2 of them reported increased economic activity. And if that's again the case, then it makes it more difficult for the Fed to raise interest rates. And yesterday's market told us that the bond players don't think the Fed's going to raise interest rates. Futures, while they have jumped back up to about 70% for a rate increase in December, the futures market's still saying March of 2016 is more likely. So we'll see. So first sells 4 to 6, then 9 to 11. First buy is in this 95, 97 area. Allows them to get stops below the overnight session low. And then 90, 92 for buy 2. And we will see what happens. It's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.